Before you can record the transaction in the journal and then post it to the ledgers, it is important that you know the double entry rules of recording. That's why we have been going through the different transactions and identifying the account names and which accounts to debit and credit. I will now take you through how to do the recording in the journals and then post it to the ledgers. Okay, so we are going to refer to the transactions, some of the transactions here. Okay, on page 44 of your textbook. Okay, now if you look at this, I have taken it out, okay, on a worksheet. Okay, what I've done, I'm going to show you. Okay, you will see this. This is something familiar to you. This is your analysis chart where you're going to do your working of the transaction. Then you're going to record it in this general journal. As I mentioned just now, the accounting information system requires requires us to record the transaction into the journals and then posting it to the ledgers. So this is how the journal looks like. After recording it here, we're going to post it to the ledger. Okay, so we're going to do this one by one. Let's look at the first transaction. But before that, read the storyline first. I will call it the storyline. Okay, so Marissa is the owner of Sweet Candy. She sells candies. So you need to know what is the business dealing with. Okay, so this is a trading business. So she is selling goods here. And it started its operations on February 2014. Okay, so if you look at this, the first transaction we see is the cash contribution from the owner. Marissa contributed. So we are looking for keywords. Okay, when we are looking at the transaction, look up for keywords. $10,000 personal cash into the business bank account. So these are the keywords that shows us, that can help us identify the account name. So since she contributed her own personal cash, this becomes the capital and cash at bank account. Okay, so we are going to write down in the analysis chart our working cash at bank. These are the two accounts and the capital. Okay, next we ask ourselves, what is the element of accounting? Cash at bank will be asset. Okay, so now asset has increased. So asset plus capital is owner's equity. Okay, the capital has increased here, plus. Now, the effect on the account would be, now, it also increases the cash at bank account and the capital account also increases. How does it affect here? Okay, so based on our Alice rule, we write this down. Okay, so since asset plus, okay, asset has increased, so it costs us to debit the account. So we will debit $10,000 into the cash at bank account. And for capital account, okay, applying the Alice rule, okay, capital plus, we credit. So $10,000 credit, okay, into the capital account. Okay, now, next, we're going to record this into the journal. So that's our next step. Alright, recording it into the journal. This is the format of the journal. You have the date column, particulars column, debit and credit. So we are going to always enter the item to be debited first. So the account that is to be debited, cash at bank account, is the one that is to be debited. Okay, now when does this happen? It happens on February 1. So cash at bank is the account that we are going to debit, and we enter the amount that is debited, which is $10,000. Next, the other account is the capital account. And the capital account, we credit $10,000. Okay, notice that there's a space here. That's the format. Okay, the first account is written very close to the line. Then we have a space, okay, to write the name of the second account. And what do we write here is called the narrative. Okay, so the narrative will be cash contribution from owner, meaning the narrative will tell you what this transaction is all about when you look at the journal. Okay, so we have completed the recording in the journals. Now, okay, we are going to post it to the ledgers. So this is the ledger account. So as we can see that just now we have two accounts here. This is how a ledger will look like. This is the columnar format. They are in columns. Okay, you can see this is the date column. This is the particulars column. Okay, debit column, credit column, and you have a balance column. So you see two tables here, okay, that look like a table, but they actually is an account. So the first account, we will always, we will write down the first account that we see, cash at bank account. And then the other one will be the capital account. Okay, so we have date, particulars. Now, another thing that we want to form a habit in future is this. Cash at bank account, okay, maybe we just write down in pencil. Okay, it's an asset account. So we look at Alice, an asset account, okay, in the debit column would be added, will be an increase or plus, and then the credit column minus. So we write this down for future reference when we want to find the balance later on. Okay, so capital account, let's look at the capital account. Okay, it is minus in the debit column and then it's plus in the credit column. So capital account minus plus. So this is for our reference later on. Let's do the posting now. Okay, so what we do is we need to debit the cash at bank account. So what we do is go to the cash at bank account, enter the amount on the debit side. Okay, because there is an increase, right? It shows the increase in the cash at bank. Okay, and what we write next will be capital. Okay, why? Okay, this capital is written in the particulars column to show the name of the account where the credit entry is posted to. In other words, okay, this will be the other account name. So these two, they go hand in hand, like husband and wife. If this is the husband, you will write the wife's name here. Okay, so next we write will be the date. Okay, so we have almost completed our cash at bank account, and what we want to write last will be what's the balance amount in this cash at bank account. In this case, there's nothing else to add, or what? $10,000. Okay, it's debit. Okay, now let's look at the capital. We need to credit the capital. So credit the capital account. We go to the credit column of the capital account, enter $10,000. Okay, and then the credit column in the capital account show the amount contributed by Marisa, the owner. Then in the particulars column, okay, we will write down cash at bank, which is the name of the account where the debit entry was posted to. Then don't forget your date. So you realize that if you enter the capital account, okay, this will be the other account that you are going to debit. Okay, so they are hand in hand. You debit one account, you credit the other account. And then the name of the account will be the husband or the wife's name. Okay, so in this case, finally, we complete it by writing the balance here. There's nothing to add, so that's the balance. Okay, let's look at the next one, okay, which is on February 2nd. Okay, February 2nd, February 2, okay, shows some borrowing. Okay, so let's look at some important, sorry about this, okay, some important keywords here. They obtain loan. There's a bank loan. All right. And normally bank loan will be put in the business bank account. So this is a bank loan. That's the name of the account. And the cash at bank account will be affected. So I will write down the account name here. Cash at bank. Okay, and then we will write down bank loan. Okay, so now since you borrow money from the bank, okay, your asset, cash at bank is an asset, okay, the element, the asset will increase. And bank loan is a liability, it's a long-term borrowing, and your liability has also increased because from no loan, now you have a loan, so your liability has increased. Similarly, your account, your cash at bank, just now you had a certain amount, 10,000, now you have another 5,000, right? So the account, the effect on the account will be an increase. Similarly, liability will be an increase. So let's apply Alice. Okay, so asset plus is a debit. I will enter $5,000. Liability plus, oh sorry, my mistake here. Okay, this is minus plus minus. Okay, so liability plus is a credit, so I will enter $5,000. Okay, so what do we do next is record it in the general journal. So this happens on February 2. Enter the amount to debit first, $5,000. Write down the account name to debit, which is cash at bank. Okay, and then the credit amount, enter in the credit column. And which account are we going to credit? The bank loan. Okay, account. So what is the narrative here would be, okay, loan from bank. Okay, so now we are going to post it to the ledger. What are the two accounts name? We write down cash at bank account. Then we will write down bank loan. Okay, next we want to form a habit, as I said just now. Write down the plus and minus here. So an asset account, okay, the debit will be the plus, credit will be the minus for us to take note of. Bank loan is a liability, right? Liability, okay, liability, debit, okay, will be the minus. The credit will be a plus. Okay, so now we're going to enter. Referring to the journal, or we can refer to this, what we do is we're going to debit the cash at bank account. So debit means enter on the debit side of the cash at bank account, $5,000. Okay, so what happens here is it shows an increase in the cash at bank account. Alright, and what we are going to write here is bank loan. So if this is the husband, this is the wife, okay, the partner. It will be written in the particulars column. Okay, I missed out here. Don't forget to write this heading. Okay, it will be written in the particulars column. Okay, to show the name of the account where the credit entry is posted to. And next, we are going to write down is the date. Okay, next, finally, we write down our balance, $5,000 debit. Okay, of course, we remember we have $10,000 from previous transaction, right? But for the purpose of this illustration, I'm just going to do one transaction by one transaction in the account. So the next account we're going to look at is the bank loan. So what are we going to do? We need to credit the bank loan account. Enter on the credit side. So the loan is $5,000. Okay, enter to show that the amount owed to DEF Bank. And in the particulars column, we will write down cash at bank, which is the name of the account where the debit entry is posted to. Okay, so over here, you have February 2. Okay, so finally $5,000. $5,000 credit. Okay, let's look at our final transaction. the business purchased candies for $6,000 cash and issued a check. Okay, $6,000 purchase candies. So the business sells candies, right? So this will be the inventory, and cash at bank will be affected. Okay, so let me just write this first. Right, so we have the account inventory and we have cash at bank. Okay, so inventory is an asset. The inventory has increased when you purchase the candies. Okay, cash at bank is also an asset, but since you use the money, okay, so asset will decrease. Okay, inventory account also will increase. Cash at bank account has decreased because you have taken out the money. Okay, let's look at this. Asset plus is a debit. So you will debit $6,000 into the inventory account. And then asset minus is a credit. $6,000. Okay, asset minus. Okay, next, we're going to write down record in the general journal. Okay, we have these two accounts and it's on February 7. The date is February 7. Okay, so what do we debit first will be the inventory account, $6,000. And we write down the account name. And next, what we credit, we will enter $6,000. We will write down cash at bank. Okay, so the narrative again will tell what this transaction is about. Will be purchase of candies. Okay, purchase of goods rather. Okay, by check. Okay, now what we're going to do now is to post this into the ledgers. So this will be the inventory account, cash at bank account. So the two accounts now. So you realize that we have these two accounts that we are going to post to. Okay, next, we know inventory is an asset. Cash at bank is also an asset. So let's look at here, the debit. Okay, when we debit an asset, it shows an increase. So we'll write down here, when we credit an asset, it shows a decrease. Similarly, same thing. This is also an asset account, so it makes it faster. So what we're going to do now, okay, post it. So debit $6,000 in the inventory account. So go to the inventory account, enter on the debit column $6,000. And what do we write here? The husband's name? Yes, cash at bank is the account name to write here. And this happens on February 7. Okay, so the balance here will then be $6,000 debit. That's the balance. Okay, that's the inventory amount that we have. We bought this. Okay, it shows that increase in our goods. Okay, in our inventory. Okay, next. Since we buy and we pay check, so there will be a decrease in our cash at bank account. So credit the cash at bank account, enter this on the credit side, $6,000. Okay, write down the account name, which is inventory, and the date. So finally, we finish off writing the balance down. There you have it. Okay. Always enter them together because it's a double entry. Okay. They are, one account is debited, the other account is credited. And what you write, the account name that you write here will be the name of the account, okay, that the other item, the other side is posted to. Okay. Now, do look at these three transactions again to revise. And when we come to class, you will have an exercise to do. And hopefully, you'll be able to apply what you learned today. Just a note, again, there are some parts here in this example that I have changed a little bit. That is slightly different from the textbook. Okay? So, you can refer to the worksheet. And all the best. Bye.